Okay, so let's imagine this for a second. You're checking your credit card balance. And instead of like your normal bill, you see this crazy number. A number so big, it's kind of terrifying.
Yeah, I think we've all been there.
It's like, but on a way bigger scale, right? Like for the whole country. We're talking about the U.S. national debt.
Right.
And it just hit a mind-blowing $35.751 trillion.
Trillion. With a T, that's insane.
Yeah, it's a lot to wrap your head around, to say the least. But don't panic yet. We're going to break this whole thing down. We're doing a deep dive into this recent report from Bank of America.
Oh, interesting.
Really unpack what this massive debt means and see what they recommend people do about it, especially for investors.
Makes sense, yeah. Because what's interesting here is that Bank of America, they're not messing around. Like, they're seriously saying we're headed for this level of debt we've never even seen before.
Yeah, and coming from them, that really caught my attention.
Yeah.
They're not exactly known for being like the doomsayers of the financial world.
Yeah.
So seriously, what makes this such a big deal? Why should we even care about this?
Well, okay, imagine it like this. It's basically like having this huge credit card bill that just keeps growing.
Okay.
And every month, it just gets bigger.
Huh.
So as the principal or the original amount you owe goes up, the interest payments do too.
Right.
And with interest rates going up like they have been, those payments are taking a bigger and bigger chunk of the national budget.
Yeah.
Like, it's one thing if interest rates are low and that payment is kind of manageable.
Right.
But when rates go up...
It's like everything just gets more expensive.
Exactly. It's simple math, but with huge consequences for all of us.
So walk us through those consequences. I mean, what does this actually mean for, say, someone listening to us right now? Like, how does this affect their everyday life?
So basically, it boils down to less money for all the things that directly impact our lives. You know, things like schools, roads, healthcare, even national defense. So imagine you're trying to manage your own budget.
Right.
And suddenly your credit card payments double. You'd have to make some really tough choices about where to cut back. It's kind of the same idea, but on a much larger scale.
Right.
It's like the government's household budget, if you will.
And speaking of the government's budget, there was this one figure that really stuck out to me in the Bank of America report. They cited this statistic from the IMF saying government spending could increase by as much as 8% of GDP by 2030.
Yeah.
That just seems like a huge jump in spending.
Yeah, and it makes sense when you think about it, right? That 8% isn't random.
Right.
It's coming from real issues that we're dealing with right now, like dealing with climate change, needing to spend more on dissidents because the world is kind of a crazy place.
Yeah.
And of course, taking care of the aging population, all these things are important. Yeah. But they need serious financial investment. That's where that 8% comes in.
So, okay, we've got this huge national debt that could squeeze out important government programs. And on top of that, they're predicting even more spending in the future. So what's Bank of America's solution here? Do they have an answer to all of this?
So Bank of America's big solution is to invest in gold.
Right.
Gold. Like the actual shiny metal.
Yeah.
Okay, that feels a little bit like, I don't know, Indiana Jones or something.
I mean, you're not too far off.
So explain this to me. Walk me through the logic here. What's the connection between gold and this whole national debt thing?
Okay, so it's not like Bank of America is suggesting we raid Fort Knox or anything.
Okay, good to know.
It's more about understanding how gold has always been this kind of safe haven asset. It's like that cast iron skillet in your kitchen.
Yeah.
Reliable, durable. And it tends to hold its value, even go up in value when things get a little chaotic.
Chaotic, say, a massive national debt situation.
Exactly.
Think back to the 2008 financial crisis, for example. While the stock market was totally freaking out, plummeting like crazy,
right?
Gold actually went up in value by over 25%.
Wow.
It's a classic example of what investors do when they just don't know what's going to happen. They get scared and they turn to gold.
So it's like when the going gets tough, the toughs invest in shiny metals.
Something like that.
I kind of get it, yeah.
No.
But they aren't just suggesting we casually buy some gold, right? They actually have a price target, don't they?
Yeah, they're pretty bullish on gold.
But
they're predicting it could hit $3,000 an ounce.
$3,000 an ounce.
Yeah.
That's pretty specific. But is that realistic?
It's a bold prediction, definitely.
Yeah.
And Bank of America does say there might be a few speed bumps along the way.
Speed bumps like what? What could possibly slow down something like gold?
Remember we were talking about the Fed, the Federal Reserve, and how they're starting to maybe lower interest rates?
Right.
And the possibility of this no-landing scenario for the economy?
Yeah.
These factors could slow down gold's growth a little in the short term.
Hold on, can we go back for a sec? What exactly is a no-landing scenario? Does that mean the economy just kind of floats there? What happens?
Basically, it means we avoid a serious recession. Like, things might slow down a bit, but we don't have a full-on crash.
Okay.
And when investors feel like that's happening, they get a little more confident, and then they tend to put their money into things with higher growth potential,
Right.
like tech stocks or real estate.
So they're willing to take more risks.
Right. Gold is the steady, reliable, I don't want to say boring, but
Yeah.
it tends to do best when things are a little gloomier, you know?
So gold is the ultimate contrarian investment then, right?
Yeah.
Everyone zigs, it zags.
Yeah, you got it.
Yeah.
It all comes back to psychology and how investors view risk. When they feel like things are shaky, they go for the gold, literally.
Right.
But when things feel stable, they're more likely to take a gamble on something else.
This is starting to make sense. But where does that leave us on Bank of America's recommendation? Are they right about this whole gold strategy? Or are they getting blinded by its, metaphorical shimmer?
Right.
So we've really dug into this idea of gold as a safe haven, especially with the national debt being what it is.
Right.
And it's definitely interesting, but it still feels like we're putting all our eggs in one basket, doesn't it? What happens if the price of gold just, I don't know, doesn't do what Bank of America thinks it's going to do?
Right.
Or what if the economy just goes in a completely different direction?
That's the thing about gold, right? It can be valuable, for sure, as part of a bigger plan, a diversified portfolio.
Yeah.
But it's not some magic solution. It can't just
Right.
solve everything. Relying on gold to fix the national debt, it could actually backfire.
Yeah, that's what I keep thinking about. Like, it almost seems too simple,
Yeah.
If gold was really the answer, wouldn't everybody be doing this already?
Exactly. It's tempting to look for those quick and easy answers,
Right.
especially with something as complicated as the national debt.
Right.
But the reality is, there's no one thing that's going to fix this.
Right.
We need to be thinking about a lot of different strategies.
So what are we talking about here? What kind of strategies?
Well, things like making changes to fiscal policy, making sure the government's spending responsibly,
Right.
and finding ways to help the economy grow over the long term.
So it's almost like Bank of America is giving us this, shiny distraction from the real issues.
In a way, yeah. But it highlights something really important about finance and just life in general.
With that.
Critical thinking. Don't just believe something because it sounds good or because some big institution said it.
Right.
Ask questions. Challenge what you think you know. And see if there's another way to look at things.
So where does that leave us? If gold isn't the end-all be-all answer, what should we be taking away from all this?
The big takeaway here is that the national debt, it's complicated. There's no easy fix. There's no magic wand, no single investment that's going to make it disappear overnight.
Right.
But by understanding how things work, you can make smarter decisions about your own money.
This has been a really fascinating deep dive. I feel like I've gone from totally clueless to cautiously optimistic, maybe.
That's what we like to hear. Remember, knowledge is power, especially with something as important as your financial well-being.
Hit that Dabb.